Good afternoon, George Cavaligos for HFT Bonds. Okay guys, it's Tuesday afternoon at noon. The 2-year auction results have just come out. Pretty good auction. Again, we saw some talk in the media this morning about the idea of the Fed tapering, but also at the same time extending their forward guidance, sort of giving the short end of the Treasury curve that safe, comfy feeling that they don't have to worry about the Fed actually raising rates. Well, you know, the talk before was I think the Fed guidance now is first rate hike not until the end of 2015. The talk was previously that they would extend to 2016. Personally, I don't think they're going to do anything tomorrow. It's Chairman Bernanke's last meeting. I don't think he's going to rock the boat. I think he'll wait for he won't wait, but the Fed will wait until January when Chairman Yellen is in place before they even point to a taper. The market's already priced in a lot of taper anyway. We've been talking about this since May. The market's had a huge sell-off since May in the treasuries. Equities have had a huge rally since May. Taper or not, I don't think the market is going to move much to the downside either. One of my friends sent me a study that somebody at their firm did on TLT, which is the long bond ETF. And it shows the highest short interest since 2008. If you remember back in 2008, the bonds proceeded to have probably the start of the biggest rally we've seen in decades in the bond market. So, you know, everybody can't be right. We all can't be short the bonds. Bought puts like crazy. You know, if you guys have seen these videos, or if you're in our chat room, or if you're in our email list, you guys know that our put-call ratios have been showing huge buying of puts over the last month, probably longer. My memories are going as I'm aging here, but it's been big. Yesterday was the first day I saw a neutral dollar-weighted put-call ratio in the bond market. You can see these measurements. We post them on our open public blog every afternoon. Our dollar-weighted put-call ratio is based on the bond and note futures. Watch the note futures. Obviously, it's the most heavily traded debt instrument in the world. If you go to HamsyAnalytics.net, it's posted every afternoon along with these videos and VIX put-call ratios, a ton of free information. Free educational webinars on how Hamsy has constructed these dollar-weighted put-call ratios and how they have become a very useful tool, especially in trading some of the equity indices. The VIX dollar-weighted put-call ratio is a big trading tool, short-term. The bond and note put-call ratios, I think, are a longer-term signal. We don't see massive intraday swings there. And from what we've seen, it's been just puts. Buying puts, buying puts, buying puts for the last month to two. Everybody can't be right. I think the wave counts are pointing to a possible move to a retest of the lows from the non-farm payroll data, or maybe even a lower low. But I don't think we'll be able to stay down there. I think we could see something like we saw in the non-farm payroll data. We obviously got bearish non-farm payroll data, and what happened? The market spiked down, made a low in the bonds, a new low in the bonds, got close to the old lows in the notes, and then rallied. We're rallying again today. It just tells me there's too many shorts in the market. Now, I won't have a position going into tomorrow's FOMC statement. If I did, if somebody put a gun to my head and said you had to have a position on, I'd be long some call spreads probably at this point. I just don't think the market's going to be able to sustain a move lower from these levels. So, what do I want to do? I want to buy a new low. That would be my favorite trade. There's some measurements that point in the bonds to a retest of the recent lows and maybe even a lower low down towards the 127.5 area in the bonds. If I see the 127.5 area, I'm going to put my toe in the water and try to buy them. We'll see what happens. I would probably wait for some type of a reversal trade off of that level. Look for some type of a short-term candle signal that would give me a buy signal down there. That's the safe trade. We all know I'm a safe guy. So that's the game plan. A little bit early today. I have to run to a doctor's appointment, unfortunately. But I got to get this taken care of today and be ready for the data tomorrow. and have a game plan, have your levels in front of you before you go into this thing. I'm an old Boy Scout, the old Boy Scout motto, guys, right? Be prepared. I'll see you tomorrow in the morning email and in the chat room. Have a great night.